Good morning, Bay Area. This is John Payne, the host of Real Estate Radio Bay Area on the Bay Area exclusive home for Fox News Radio 910 a.m. And this is the RateWatch Now Daily Update Report. We go ahead and jump in. This is what the mortgage-backed security market looked like yesterday. Not really good. A lot of rates going up, and I actually, in conforming rates, we've actually left the land of 3%. So a pretty big gap down opening this morning as well, as I'll show you. What's going to make rates go up today? We had consumer confidence out. It's actually up to 50.2 from 48 last month, but 90 is what shows a strong economy. So although we're up, we still have a long way to go. But the fact that we're up, I had to put it on this side as well. Dudley speaks. Now, Dudley is the Fed chair out of New York. And when he speaks, he has a lot of influence from the Fed on the open market. And Dudley came out talking about that the Fed is really responsible for minimal adjustments, not massive adjustments. So minimal adjustments means that he's talking about $500 billion in quantitative easing too, as opposed to the $2 trillion that was once mentioned. So this has totally spooked the market. Speaking of spooking, what wind up happening is that we had the 5-year tip auction yesterday, and tips are bonds that are adjusted for inflation. So they're pretty desirable because inflation goes up, you automatically have a hedge. Well, the market didn't react well after the auction, which is causing fear in the 2-year auction today, and they're trying to auction off $35 billion. So I think that what we're seeing this morning is the combination of Dudley speak and the auction, or the effects after the auction, is really reaping havoc on the markets, and I'll show you the huge gap down opening this morning, which is pretty alarming. What's going to make rates go down? We have Case-Shiller. It's out today. For those of you who don't know, Case-Shiller is the indexes that looks at home prices in 10 major metropolitan areas. The Bay Area happens to be one of those areas. And although we were up, we were down over last month. And that's overall on the Case-Shiller. Now, when I drill down to just the Bay Area was up 11.2% last month. We're down to 7.8% this month. So we actually dropped 3.4% month over month. So that goes here. Home prices are up, but we're still lower than what we were last month. Corporate earnings. If you turn on the news, that's the squawk. Bad corporate earnings are coming out, which is putting pressure on the Dow. Now, I think, like I said yesterday, I think that the good Dow was putting pressure to push mortgage-backed securities down, and I think the opposite is going to be true today. As long as the Dow stays negative, it's going to help us close this gap that I'm about to show you in a few moments. Here is what the mortgage-backed securities market has been doing this morning. Kind of a little indecisive, up and down. You can see 38 lenders have repriced for the worst due to this gap down opening by 28 basis points. Here's the huge gap down I was telling you about. We've fallen from our home. And a couple of things can happen here. We could possibly, and I think we are going to move in the upward direction. As you can see, this candlestick is green, so we started to do it anyway. We opened up down here. I think that we could go up to this floor. Now, do we hit this floor and bounce off? If we do that, we're going to be in a new trading range. Or do we penetrate through this floor, which I can hope. Now, for all of you LOs out there, if we push up against this wall and bounce off, it might be a good time for you to lock for the short term. And again, it depends on how bad the Dow gets beat up. I think that's going to be the catalyst to determine whether or not we break through or not. In summary, Dudley speaks of tweaks and not massive actions, which is really, really affecting the market this morning. Consumer confidence is a bit better, but it's still in the toilet. Home prices are up a little, but it's not as much as last month. And $35 billion in 2 years sprinkled on top of a spook market, it's not a good indication of success in the market today. And I expect to struggle back up to par 80 to close the gap. And if we get through that, we will find safety in the range. But if not, we're in the new trading range. That's all I have for you this morning, Bay Area. Make it a great day. Don't forget, tune into my show on 9:10 a.m. on Saturdays from noon to 1. Until tomorrow, Bay Area.